U.S. markets just closed their best quarter since 2020, but a major miss in June payrolls and a sudden tech sell-off are testing that momentum. While the baseline health of the major indexes remains robust, the sudden cooling in employment data creates a much less forgiving environment for the second half of the year. This chart shows the year-to-date performance across the major indexes, highlighting the Nasdaq's nearly 13% surge, alongside significant gains for the S&P 500 and the Dow's second consecutive record close. But the macro data is shifting. This waterfall chart illustrates the June job additions miss, plunging from 115,000 consensus to just 57,000, with April and May revised 74,000 lower. Despite this hiring drop, overall unemployment edged down to 4.2%. This cooling labor market interacts directly with monetary policy. Fed Chair Kevin Warsh stated on Tuesday that inflation risks have come down. The combination of softening employment and easing price pressures keeps interest rate cut hopes alive, even if immediate cuts are not guaranteed. Beneath the surface of the broad indexes, a sharp sector rotation is putting intense pressure on the AI and semiconductor trade. The VanEck Semiconductor ETF dropped 3% in a second straight session of declines, dragged down by heavy losses in equipment makers like Teradyne and KLA, which each fell nearly 8%. Even industry leader NVIDIA slipped 1.2% as the broader tech sell-off took hold. Capital is actively flowing away from high-flying tech names, indicating that investors are beginning to hunt for value in other sectors. In this transitioning macro environment, specific corporate catalysts and index reshuffling are driving outsized gains for individual stocks. SpaceX shares surged over 7% ahead of its Nasdaq 100 edition next week, a move JP Morgan estimates drives $4.3 billion in passive inflows. Rivian jumped 13% after citing stronger than expected Q2 demand and raising its 2026 delivery guidance to 70,000 vehicles. Alphabet experienced a mixed week, officially joining the Dow Jones Industrial Average, but losing a European antitrust appeal that upholds a $4.6 billion fine. These individual surges demonstrate how specific corporate catalysts and index realignments can drive gains even when broad index momentum slows. The macroeconomic environment is in transition. The massive second quarter tech rally is facing resistance, just as the labor market flashes distinct cooling signals. Next week, focus shifts to the massive passive inflows driving SpaceX and whether the semiconductor rotation is a brief dip or a sustained trend. With U.S. markets closed for the Independence Day holiday, investors have a long weekend to digest the shifting data before the Monday reopen.